Hello everybody, so this is Mr. Market Switch. I'm super excited to be here with you again after a long period of time, but I'm glad that I'm back. I'm the author and the creator of Market Makers Codes, and I uploaded the first video, the first MMC video 3 years ago, and I can see there are numbers of people who are claiming that MMC is theirs, as if it belongs to them. They are the one who came up with it, but I don't mind them, because you see, I uploaded the first video 3 years ago and it went viral, and there are numbers of people all around the world who are using market makers codes, and they are making a lot of money. So if anyone is claiming that MMC belongs to him or her, I don't mind, because I'm glad that they're making money, and they see it as something good for them. And my goal is just for everyone out there to be a profitable trader. So if you're making money using my strategy, then I'm glad, I'm good. I don't mind. And if you are teaching my strategy and you are charging people as well, and if you're making a decent money out of it, no problem, I don't mind. But make sure you teach it the right way. Make sure you teach it the right way, because I don't want people to be scammed, right? So today I'm here to introduce something good to you guys, because you see, forex market is not static. Forex market is dynamic. There are a lot of changes that are happening over a period of time. So when things changes, when dealers change the approach to the market, you also need to modify your strategy and make sure you go with them. Remember, market makers codes is very essential in trading hand in hand with the dealers, and make sure that you're not losing every step forward. So guys, this is it, and today I'm introducing to you market makers codes combination type 1. Market makers codes combination type 1, and this comes after a lot of time watching the market, after everything that is going around the world right now. So I came to realize there are things that need to be placed in place so that you can remain profitable. So this, guys, is something that is going to change your entire trading style, and it's going to make you more profitable, and it's going to make the market more clear to you, and you're going to see the way these dealers or the way these market makers are moving the market, and it's going to be a very, very important thing, and it's going to be a very fantastic and amazing stuff. So the same way, if you haven't watched my previous video regarding MMC, make sure you watch them, because you get some concept that will help you to understand this one. If you didn't watch them, you may not get some things, because I'm not going to start from the beginning. I'm just going to start somewhere at the middle, so that we can be able to make some couple of videos. It's gonna be MMC combination type 1, MMC combination type 2, MMC combination type 3, and today I'm going to do MMC combination type 1, and you're gonna have to wait for other combination types, so that you can be able to put everything all together. Okay, so this is it. I'm gonna use 4 hours for you to do MMC combination strategy. You're gonna have to use 4 hours time frame, and remember, in 4 hours time frame, every period separator here, every single period separator here represent 5 days. Make sure, if you don't have if your chart is not in this look, make sure you put it in that look, because sometimes there are people their chart will look like this. So if your chart is looking like this, you have to right click there, and then you go to properties, then you go to common. If you are in color, you go to common, then just remove show grid, then put a tick on show period separator, then there you go. Now you'll be having this type of chart, this type of look in the chart, and then every period separator, make sure you go to 4 hours time frame, and then under 4 hours time frame, every period separator represents 5 days. 5 days. And remember the rules. You have to mark from when the market closed on last Friday. That means from here to here, it's what the market has been doing this week. I mean, from Monday to until Friday today. So so this is what the market has been doing. This entire candles here is what the market has been doing. Is what the price has been doing from Monday. So which means market closed somewhere here on last Friday. So I come here and I put my horizontal line there to mark the point where the market closed on previous Friday. So I count now how many days? 40 days back. I count 40 days back. I want to put a bigger picture first, then I'm gonna add small pictures within. So this 5, 10, 15, 20, 25, 30, 35, 40. So the line is already there. Oh, good. I think it was already there. Nice. So if it's not there, you just put it there. Okay, now I'm gonna drag this a little bit back. Okay, so that to get the clear picture, I'm gonna put it there. Then I'm gonna mark the highest price reached. So this is a 40 days market makers code. This is the first 40 days. I mean, what the market has been doing in the past 40 days. When I say 40 days, I mean 2 months, because forex market is 24 hours 5. That means a month contain like 20 active days, and then 40 days represent 2 months. So for the past 2 months, there has been this kind of thing. There has been a downtrend. See, the market has been moving down for the past 2 months. That means if you sold Euro Swiss franc just around here, that means you could hold for 2 months consecutively, just going down. You will be making tons of money, my friend. If I count the pips from here to where the market is at the moment, is over 700 pips. Is for over 700 pips. Okay, it's over 700 pips, my friend. So you would be rich, my friend, if you had like 1 lot running, or 2 lot, or 5 lot, and you knew about this concept. You could make such big amount of money. So here it is, guys. So after I mark the 40 days, so I take the horizontal line and I mark the highest price reached within previous 40 days. This was the highest price. The price reached here before closing down here. So the highest price, and then I mark the lowest price reached within the 40 days. The lowest was here, around here, and the second highest somewhere here. Okay, somewhere there, around there, and the second lowest somewhere there, here, right? All right, now this is 40 days. Now how now comes about combination. That means when I say MMC combination, I combine 40 days, 20 days, and 10 days MMC. 40 days MMC, 20 days MMC, and 10 days MMC. How do I do that? So, which means if every single period represents 5 days, that means if I want to mark the 10 days, I count 5, 10. Then I take a vertical line, another vertical line about there. So I have to change the color of this so that I can differentiate or distinguish between the 10 days, 40 days, and so this is for 10 days, and then for 20 days it's 5, 10, 15, 20. So I put there. All right. Okay, so I mark it as well. Okay, maybe which color? Maybe this one. It look good. It's a little bit faint. I want something clear. Okay, maybe I do this. Yeah, red line. All right, so there I am. So what do I do next? The next thing to do is to mark the 10 days supply zone and demand zone. So here I come here, the highest price reached within the previous 10 days, or this one, 10 days, the second one could be somewhere within this yes, somewhere within that remember guys, this is the supply zone, or the highest price within the past 10 days, the second highest. Then what about the lowest and second lowest? It's still the same as 40 days. So I close my case there. Now I go to 40 days. For the case of 40 days, I have this, the highest price, and the second highest price is somewhere here. Okay, so I close my case there as well. Now these are the important zones. The 10 days zone, the 20 days supply zone, 10 days supply zone, 20 days supply zone, 40 days supply zone, and this one down here represent both. Represent all. Represent 10 days demand zone, represent 20 days demand zone, because within the past 10 days is still the same, and 40 days is still the same, and represent 40 days demand zone. Right guys? So we have the common demand zone but different supply zone. So what does that mean? It means that this supply zones that we have up here are the crucial area where the market, the price will behave a certain way, and I'll come to explain about that. How do we go about it? So after you're done with that, maybe you could put some little bit kind of shape, so that to differentiate from one to the other. Okay, if you like, it's not a must, but for the purpose of learning, I can just do that, because you see, it helps sometimes. There are people who learn better when they see colors. Okay, so I put that one as well. This, remember, this is so maybe I change the color here, this kind of color. Okay, right? So this is 10-day supply zone or resistance, and this is 40 days supply zone or resistance, and you have another one, the last one here, which is, this one is 40 day. This is 40 day. Okay, we put a very clear red line. Okay, all right, so I have that one, and down here I have this you have this one. So I'm already in, I'm buying this, and it's still running, and I'll explain why I did a buy on that. Okay, so right, good. So this is a common demand zone or support. I'll have this one, 10-day resistance or 10-day supply zone, and I have this 20-day supply zone or resistance, and I have this 40-day. Now, what else do I do? After I'm done with that, then I'm gonna have to put my Fibonacci retracement. I'm gonna have to draw from the peak to the trough, the Fibonacci. This is very important because it shows you the key levels. The key levels are important for your target and for other price actions. And now you see what is happening. Remember, when you look at this, you see even the 10-day supply zone is nearby this 23.6 fiber level, and you can see also the 20-day supply zone is nearby 38.2 fiber level, and here you have 50 fiber level, and you have the golden ratio here 61.8. Then you have the max the highest targets or the maximum targets 78.6 and 88.6, and you have 100 here. And most of the time when you have this kind of trend, downtrend like this, and there is an indication for market reversal that I'll explain a little bit later, That means you can expect at least 50% or 61.8, which is the golden ratio, market correction of this movement. I mean, you can expect the movement of the price to this level, just at least, that is at least 50% or 61.8, which is the golden ratio, fiber level, correction, market correction of this movement. Now, I'll explain why we should be looking at that in the near future after I'm done with this. Now, the question is, okay, I have this this downtrend. Now, the most important question is: do we expect to see a continuation of this trend, or there is an indication or any kind of indication for market reversal? Now, looking at this, I can tell you, my friends, that there is an indication for a market reversal, and I will explain a little bit later up to where, up to which point do we expect this market reversal to take place, or this market correction to take place, because market reversal is essential or is crucial for market correction of the previous trend, and that is very important, because if the market keeps on moving on one direction only, it will be very predictable, and market makers don't want that. And that's why you see this kind of move, wave-like move, up down, even though the overall trend is down, but there is up down, because they know that there are people out there who don't seem to understand the concept behind, don't understand the mind of market makers. The crucial point, or the important thing in this online forex trading, is to understand the market maker's mind. And how do you do that? You do that by studying the chart. You need to study the footprint of market makers, the footsteps, and you need to understand why are they doing what they are doing, why are they moving the chart the way they do. That's very important. And here is the thing. So we have this kind of movement down, and then reach at this point, there is another confirmation that we need to look at. Of course, the price is at 40-day demand zone, which is the crucial or the most important demand zone in the forex trading. But also looking at this, you see there is a reversal pattern here. There is a kind of inverse of head and shoulder being created. It's not yet clear, but it's being created. And for aggressive traders, could take this right away and hold it. And then you see, this is what is happening. It's happened just right before our own eyes. A reversal pattern forming at what? Forming at demand zone. And this is very important. Now the question is, how do we know that is not another kind of pullback before continuation of the trend? How do we know that? That is very important. Now, to explain that question, if you go, okay, if you go to higher time frame, like monthly time frame, I want it to be very clear. If you go to higher time frame, like monthly time frame here, do you see where the price is at the moment? This is where the price is. Now, looking at this case, sorry, there is a lot of noises here. You see, in 2000 and 2015, it was January 1st, there was a market crash, and that is what happened. The market moved down. It was over 2,000 pips in a single day. This happened in a single day, my friend. It's on monthly view, but if you go to daily time frame of this, you could see it happened in a single day. This candle opened and closed in a single day. Over 2,000 pips were created. I want you to make your own analysis, and make sure you make your own review. You'll come to realize what I'm saying. Now, look at this. Do you see where we drew the line, the demand zone line? This is the lowest price ever reached, the lowest price ever reached by Euro Swiss franc since it started, since this instrument was introduced in the forex market. So this is the lowest price, and you see it is now at the lowest point. That means it is not only a 40 days market makers calls. It's not only 40 days. It is a monthly. It is the entire. It is a lifetime demand zone. So that's why I'm very sure. And sometimes it's very important for you to do that. To do a multi time frame strategy from top down strategy. I mean, you watch the market from higher time frame, then you come down to lower time frame to look for the more confirmation for you to enter with confidence. Now, this is what I'm saying. Looking at this, you see there is an indication for a better entry here, and that indication is another confirmation, which is a market reversal pattern that is being created here, which is the kind of inverse of head and shoulder. Now, I'm not saying that is now going to be a straightforward movement. There are going to be ups, down, impulse move and pullbacks and retracement, but at the end of the day, you're going to have to reach here. Now, what are the importance of the levels that I've just created? Now, this is what I'm expecting. I'm expecting this kind of movement, to this level here, right? And I'm expecting either the retest above or retest below after touching there. This is what I'm expecting. This kind of thing. I'm expecting this kind of thing. And now that is number one, and then up. And here I'm also expecting two types of things to happen. Now, that is the first thing that I'm expecting. Now, the second thing that I'm expecting kind of retest is the breakout, right, above this area, and retest here to this level before going. And how do I know that? Because after this reversal pattern has been created at the demand zone, then what you should expect is the first level, the first push, then a pullback, then the second level, and that I expect to 61.8, then a pullback, right? Then a pullback, another pullback, before now going to that 61.8 golden ratio, then before going to finish the last level, which is the longest. Always, most of the time, the third level is always the longest. Now, why three levels? If you have gone through my videos, you could understand what I'm saying, because after market reversal pattern has been formed at the demand zone, the strongest demand zone, you should always expect dealers to move the market out, to make their movement in three consecutive levels. They always do three pushes before another reversal or another turnover or another U-turn. So this is the first level. Then there will be a pullback or retracement or retest at the key zone. Then the second level, you should always expect the second level, and then a pullback. And now you understand why I drew these Fibonacci levels, because it helped me to create these levels and the pullbacks. You see, 61.8 is the key level, and it acts as a resistance. Then you have this pullback to 50 level, then another movement continuation. So these levels, level 1, level 2, level 3, are called impulse moves, and those are the most important levels that you should focus on. Now, looking at this, my friend, so your first target, your first take profit should be around 23.6 or around this zone here, right? 23.6 or a little bit above it, which is this resistance here, the key level, 10 days key level, right? That's your first target. And make sure when you open this position, at least you open 3 positions. In every single instrument that you trade under MMC, open 3. You should open 3 position. Why? Because the first position will be, you take profit at this, the first target, which is a 10-day. Then the second, you could consider if there is a significant gap between 10-day and 20-day, you could have considered the 20-day as well as second target. Or if you see that it's not a very strong resistance or a level, and the market might go above it, you could put your second target at 50 or at 61.8. Then your third target should be at 88.6, at 88.6 or 78.6 or 88.6. So you could, when the price reach at this point, you could take your first target, your first profit, then you leave the two running. Then when it reach at 0.8, you take another profit, then you leave the other one, the last one running. And that one is very good for risk management as well, because you cannot just hold this one, all of them, expecting to hit at 80%, because there are things that sometimes we cannot explain that happen in the market. Sometimes there could be some unmentioned fundamental that can occur from nowhere, and then make the market move like crazy, and then you are out of the picture. So this strategy is like 75 to 85% accuracy, and it can give you a clear picture of the market, and you can make money out of it, guys. I'm not saying that this is entirely a perfect trading strategy, but at least it helps you to increase your winnings than your losses. So guys, this is a combination, MMC Combination Type-1, and I hope you have enjoyed it. And I think you should be waiting for MMC Combination Type-2, because I'm gonna have to create another video so that to explain, because this is Type-1 and this is for a buy. You need to understand the concept for bearish market, and as well as other stuff that I'll be explaining. Thank you very much. My name is Mr. Thomas Kileo, the Market Switch, and if you want to get in touch with me, make sure you call me through +255 758 43 37 03, +255 758 43 37 03. Thank you very much. Have a nice moment and enjoy. Make sure you subscribe, my friend. Thank you.